Hi traders, DJ here. Taking a while, but here's a video of what I've been doing tonight. So let's go with the pound USD first, shall we? Okay, so I set up and let's go to our base trading setup for the London. And Frankfurt opens, so I'm just going to change to the bars, which I have, and I'm going to put in, so this we're on now, this is the London candle, this was the Frankfurt candle. So after the candle before Frankfurt closed, there's the high, there's the low. So we had the breakdown and it didn't run. Now remember that the breakouts can be false. So there's only a run of 5 pips. If it had been a run of 10, I would be ready to pull out of this trade at 5. Now the reason that I didn't pull out of the trade then and there and just cut my losses and probably got out to break even is because this whole range between the high and the low was only 12 pips. So bearing in mind that you see 5 candles back, counting this one, 1, 2, 3, 4, 5, there's the high of the last 5 hours. And that's kind of significant too, in terms of just how you trade it, without getting too complicated about it. So I was prepared to let this run back, and 12 pips was where I was going to lose it, because this could run back, and as long as it stayed between the high and the low of these 5 candles here, I had a chance that it could come back in my direction. So we're just going to get the line pulled up. So as long as it stayed between this and this, as it ran back, it could have done something like this and stayed within the confines of the box. Okay, and then it could have made a breakdown. We don't have a crystal ball, but instead it started to come back. As soon as it started to break the high of this candle here, I took a hedge and I got in long. So I took double the lot size on here. So say you had 3 10-cent lots or 20-cent lots, that's equal to 60 cents. So I just added all the 20, say I took 20 cent. Okay, let's make it simple. I took 50-cent lots. I didn't, but this is hypothetical. 3 50-cent lots, they're worth $1.50, aren't they? So all I do is get in for $1.50 here, and your accounts, you've got to be able to meet your criteria of not going more than 1% or 2% of your total capital on your account. You know, all those factors come in. It breaks through, and as soon as it starts breaking through, you'll find that on your balance on your income, if you put it over to dollar signs, for example, when you take the trade, oopsie, this is not good, I need to, when you take the trade, say you're upside down $6. When you take the hedge, you just watch the total in the balance, and you'll find that this begins to catch up to this number. Now, as it grows, this increases in terms of upside down from this trade. But the new trade catches up real quick. And so once you go 3, 4, 5 pips, or even 6 pips, depending on how big your lot size is, so say that travels to 10, by the time it travels to 10, this other one, the second trade, could be up 15. At that point, you can take $5 off that trade and cut your losses down to break even. And you just work it so it comes down to break even. And so we're having a bit of trouble, and so that's how you deal with it. Now you've got to be very careful. You can either take your small loss and leave it at that, or you can trade your way out of it. I chose to trade my way out of it simply because when I go to a bigger chart, daytime, the battery's running low, that's why we're getting in trouble here. Where's the trend? The trend is your friend, isn't it? So on the bigger time frame, we're in a strong uptrend. So when you come down to your hourly setup and you see it going back the other way, that's a high probability trade. So now I've recovered my losses and I'm sitting in box seat and I'm making some good profit now. So that was the pound USD. Now I don't do it on every situation. I'm also in the pound JPY. I had traded the pound JPY up, and it's not an impulse move, that is a daily candle change move. So we're looking at a daily chart. And this is where I got in this trade on Friday. There's Friday's candle, there's today's candle. So I got my first profit off before the market closed at 50 pips. I originally had 20, but I saw that the divergence between strength and weakness was showing me there's plenty volume in the market, so I moved my stop loss out. So here's the entry that I got in way back. Okay, now I've got alarms going off. Yes, we'll put the entry in green. There you go, entry in green. Once the first position's off, you stick it in to break even. That one needs to be red because that's take profit. You've got to be flexible with your trading. You've got to let. So off there, when I was setting up for the London, and we'll go back to the hourly, I saw this sideways movement. I had my first position off, and I was just about to take the second position off because that was coming in close to 100 pips off that trade, and I'd just taken profit, and I saw that was moving sideways, and the strength indicator was indicating that a possible resting period was taking place. So I closed out the other position. So I got 50 plus 100 plus 100, 250 pips out of that move. Use your imagination. You know the kind of lot sizes I'm usually trading in. So now, watching the strength indicator, I noticed that it started to turn again from here. So this is where I closed the trade, was right in up here. When the second position took profit, I closed out the third around about here. And we have a major 146 happening. And yen pairs, big numbers, I don't know why. You can't bet your life on it. But time and time again with the yen pairs, when they break the big round numbers, get ready because they're going to go higher. Come back to the daily chart, you can see we're in a strong uptrend. We're up above the baseline. Here's the baseline. Here's the entry indicator, still good to go north, good to go north, good to go north. So we're really in a good, strong position now. And the pound USD is starting to, it's cut out that small loss. Well, 3 positions at 12 would have been 36 pips. I've recovered all of that plus now by hedging, but you've got to be careful with hedging and know what you're doing. It is very dangerous, and you'd probably need to walk with me in the trading room live and watch me do it before you got it. So this is my base line entry indicators that I use. And it's all centered around the daily candle change. Now I do have another template that I've adjusted, and it's all moving average, but I can swap depending on what takes my fancy. In some market conditions I'll use this template, and I still have a baseline with the other template using moving averages, and it works very closely aligned with this, but it's just slightly different for slightly different market conditions. And that's all that is, and that's where flexibility and creativity come in as you gain an experience. Okay, so that's the pound JPY. The other one that we're in is the pound Swissy, and I took that again just recently, just in maybe the last 15 minutes. There's the entry, I think. Okay, so again, daily time frame. Look at the strong trend. This is where it turned around. This is where I got in. And I've been riding this baby up. We now have run over 440 pips. Now I got stopped out in here a lot, trying to hang on. I'd get my first and second positions away, get them into break even, and then I'd get stopped out. But look, all you have to do is go to a 4-hour chart and you can see the moves. And I'm using candles. It doesn't really matter. Pardon me. But as this thing's gone up, if we go to the daily, and where I started the trade, because here's your support and resistance areas. So you just need to change color here. Bear with me. It's really simple. It's not rocket science. That's why the foundations are in the truth of support and resistance. So that's not bad for support and resistance through on a daily chart. As soon as it broke that, I'm into trading it north. Okay, so here's the start of this move. And see all the tails in here? All you do is just simply put your pending order up above there and you're ready to go. Pardon me. And you can do that without even indicators, without any baseline or anything. You understand market sentiment. However, you don't need to try to learn that if you're new at trading. You just use the basic template of the baseline. Let's go. Baseline grey. There it is there. There's the baseline. This indicator is still good to go. Okay, so let's redo those lines. There was where we had the resistance line in when we had the black background, and I'll put that back in black for you so you can see it. And basically it's just really experience that teaches you all of that, but the foundational truth of the importance of support and resistance. Remember, support and resistance are not just horizontal, they also can be, these are support and resistance lines too. When they're broken, like here, that's why I got out, because I saw this starting to happen. And then yesterday, this bull candle, and I was always going to have a crack. I had an alarm set in there. And now, during the London Open, I get a chance to get in. Here is the Frankfurt candle. Here's the London candle. We're still on. In fact, yep, we're still on it. And so, knowing all of this is what I did. Go back to the daily chart. This is where I wanted to get in the trade. We come to the Frankfurt and London. There's the hourly chart. There's the candle before the Frankfurt. We get the breakout. I just had a pending order. I just had an alarm set in here. And I took the trade. The reason I didn't get in it here was because the strength indicator at that point when the alarm went off did not give me enough divergence between strength and weakness. So strength in the pound and weakness in the Swissy. So I never took it. But I saw on the strength indicator that when it started to spread and the pound was getting stronger against the Swissy and the Swissy was slowly starting to gap down and the pound gap up, I just took a market order. Now I'm upside down currently, but I'm not upside down a lot. I have my stop loss sitting under here. Now if we put this in, you can see that's what we do for the breakout trade. So all I have is my stop loss under here. I'll shift this, okay? Exactly where it's at. Why am I confident in just taking the market order when I see the spread on the strength in there? Entry lines up, it's a go. Baseline, it's a go. Come back and check the daily. You can see we're in a strong up trade. It's a high probability trade. So that's all I've got to say about all of that for now. And I'm going to put this in the chat room and you can have a look at some of the crazy stuff that I've been doing. Now, things are going really well. I'm not sure if we did the USD JPY. I don't know that we did. Let's go and have a quick look at that. Here we go. Daily time frame. Now this is what I noticed. This was not a Frankfurt candle. As I said, I just want to go over it again. Here's the first push up and then there was the swing. 104, 105 was the key level. Now I have taken this in. And we're going for it. Now this is not a London impulse move. Here's your first push up. Now it's a lovely piece of work. So we've got wave 1, we've come back for 2, and this could be 3. And usually the third are bigger than the first pushes up. Now this is not Elliott wave. I'm not interested in Elliott wave. It's just too complicated and it's not simple, but I am familiar with waves. And when you have a bottom, you can see a good bottom is formed here. And here was the key levels we were looking at to be broken. So I did catch this initial trade in here, and then once it pulled back, you just wait for the retest of these levels here, and you wait for an opportunity to get in, and sure enough, you've got it. Look, it pulled back. You could have traded this retreat or pullback. No problem at all. I mean, that whole move there is worth, it's only worth 85 pips. I wouldn't have bothered. It's just not worth it. Because bearing in mind, it looks very light. You don't know. This could have kept coming down and you could have taken it with a break of 105 back down. You would have got a few pips. You would have scalped it. But you can see, looking at the daily chart now, this is a pretty good setup for the potential of this going higher. So let's go back to it. There's 1, 2. Usually you can get 3 moves out. There might be another pullback and a 5th move, but the 5th move was usually smaller than the 3rd. So for me, this is a really, really good trade. And once we make a higher high here, and it closes above that, I'm going to be adding. There you have it. Just for what it's worth, I'll pop it in the chat, and at least you can hopefully make a little bit of sense out of all the garbage of me trying to explain it in the chat with text. So take care, trade well, protect your capital, take your losses, keep them small, and we'll talk again soon.